how do we know we're not going to find another misdeed under a rock? I mean, we thought everything was over and in the rearview mirror, and then we find out about the 401k inquiry.
Well, but again, we disclose that inquiry and that's part of the increased transparency that we have at the company. I've been very clear to say, let's not use the typical kind of financial materiality standard that most firms do in terms of disclosure. Let's look at what could have a reputational effect, and let's be very transparent with folks.
But just because you disclosed it doesn't mean that it changes the situation. There's another inquiry, and we're looking at more misconduct now in the 401k business.
Well, we don't know that, Maria, right? That's why we're looking into it. And so what we're doing is there's an active review of that. Again, if there's any sort of issues in terms of improper conduct with our customers, we'll make it right by them.
Let me ask you about the reputation and the relationship with the regulators, because people are concerned about this. If you have a bad relationship with your regulators, are they going to stop you from paying out any dividends?
I don't think so, because we just, for example, had our annual meeting last week, and the board meeting, and the board approved a 39-cent dividend for the quarter. So the answer is no. We have a very constructive relationship with our regulators. Again, as I mentioned before, we all want the same thing. We want to make sure that Wells Fargo has the best risk across all of the company. Historically, and even today, we are well known for credit risk management, for market risk management, for liquidity risk management. We need to improve our compliance and operational risk management. We've hired new leaders in those areas, and we're very focused on making that happen.
Well, at that annual meeting, you had lots of protesters outside.
We had some.
Okay. And they were
We also had a lot of people inside that were very happy to be there.
Well, the protesters were saying maybe it was the wrong move to approve a multi-million-dollar pay package for you until the governance issues are in the rearview mirror.
Sure. So, Maria, my pay package is decided by the board, and that's their decision. One of the things that I did in the last year is that the board had decided that they wanted to pay a bonus to me, and I said, no, I don't think that I should get a bonus because we still have more work to do. Most of my pay is in the form of Wells Fargo stock. It's deferred, and I need to propose and present a very focused strategy for the company and be able to execute to actually earn all that.
Look, I think what I'm getting at here is the fact that you've been at Wells for a long time.
31 years.
31 years.
Yeah.
You were the CFO before you were the CEO.
That's right.
You had a lot of positions in leadership.
Right.
And there are some people who say, look, Tim Sloan is a good guy, but he's an insider.
Yeah.
You need a complete sweep here.
Yeah.
You need outsiders coming in. You need new blood because this is deep-seated culture that is bad.
Yeah.
And you say?
Well, I appreciate you saying I'm a good guy, so that's a good place to start.
Look, I met you years ago, and as soon as I met you, said, this guy has integrity.
Yeah.
I'm not, I want to make sure to be clear about that.
Sure.
But that doesn't change the fact that you've been there 31 years,
right.
and you are part of the system at Wells Fargo. So it's an easy finger to point. Okay, get out the people who've been there 30 years and get new blood in there.
Yeah, most of that criticism is from people that don't know anything about the company and candidly don't know what they're talking about, right? I think that would be absolutely the appropriate criticism if after being in this role for a year and a half, we hadn't made any changes. We've made fundamental changes in terms, as you mentioned, in terms of our leadership, in terms of the organization, and we're making things right for our customers, and we're continuing to innovate and grow this company. This company has a terrific 166-year history, right? We've been through ups and downs. We're going through a challenging period right now, but I'm really proud of the progress that we're making.
So when you sit back and think about what took place in the last year and a half, what went wrong, Tim?
Well, we've been very clear about that. First and foremost, to your point, the leadership needed to take responsibility. There are a number of things, when I look back at my career, I wish I would have done a little bit differently. But the leadership has taken responsibility. I think first and foremost, we were organized in a way that didn't allow the appropriate checks and balances to occur within the company. We've fundamentally changed that under my watch. We centralized all of our enterprise risk functions. We had an incentive plan in our our retail banking business that, candidly, it worked for some people, but it didn't work for a lot of people, and it didn't always work for our customers. We've completely changed that. We have a new leader in Mary Mack that's leading our community banking business. She's doing an incredible job. And I could go on and on. We've acknowledged what the mistakes that we've made, and we've set a very clear plan in terms of fixing what was broken.
And was one of the big mistakes just unrealistic sales targets that you, of course, did away with?
No, I think it was an unrealistic incentive plan that drove our people to be more focused on selling things as opposed to fulfilling the vision of the company, which is satisfying our customers' financial needs and to help them to succeed financially. It's about providing the right customer service and advice. That's the #1 aspirational goal that we introduced a year ago.